All right, what's up, guys? Welcome, everyone. In today's video, I have with me Dirk from PrimeXBT Academy, and we are going to show you 4 setups that we are currently monitoring right after the intro. All right, before we jump into the charts, I want to say that this video is sponsored by PrimeXBT, where you can trade crypto, indices, and Forex and more. And you also have a very interesting copy trading platform. If you sign up using the link in the description below with the code Birb, you get up to 7,000 USD deposit bonus. So definitely check that out. It's a great exchange to be trading on. All right, Dirk, how's it going?
Good. Thanks for having me again. Happy to be here. How are you guys doing?
Yeah, I'm good. I'm great, and I'm very happy to have you here. I mean, we have a great thing going here with our live streams and the recordings of things. So it's going to be very interesting to see which setups you're watching. I have 2 on Litecoin and a Forex pair, so I'm very interested in seeing what you have on your charts right now.
All right, good. Let's maybe jump right into it. Have you shared my screen already? Or?
Yeah, I can press it right here, so it should be shared.
All right, yeah, okay, good. Here we are. So yeah, I'm watching at the moment. I'm obviously watching more, but 2 things worthwhile sharing at the moment. I think, first of all, a nice setup in the S&P 500. And which ties into the so-called FOMC meeting. And I'm just going to activate my drawings here. So for those out there who do not know what the FOMC is, it stands for Federal Open Market Committee. So basically the regulatory body of the Federal Reserve Bank in the USA. They, for example, decide if interest rates are going to be hiked. And I saw there since November that kind of a pattern developed that every time after we have those FOMC minutes, the so-called FOMC minutes, the market makes a new low. So this is the S&P 500, largest US stock index. I'm showing here, you can see here on the 24th of November 2021. That was, of course, we had this meeting. Shortly after this, we made no new lows in the S&P 500. Market recovered. Same pattern after the 5th of January, 16th of February, and the last time now we're in the beginning of April, on the 6th of April. And as you can see, the market is already trending lower. And if like this pattern really repeats in the way it did the 3 times before, we should actually see the S&P 500 attack maybe 4,000 points. So that's really quite some way still. It's like 10% of a move.
That's a big move. That's a big move.
Absolutely. And I think, you know, this is also a good example why, in my opinion, it is important as a cryptocurrency trader to also have an eye on what's going on with other assets, because especially to the downside, the cryptocurrency markets are heavily correlated to what is going on on the stock markets. You can expect normally if the S&P 500 falls by 10%, you're probably going to see a move, especially in Bitcoin and Ethereum, by maybe 20 or 30% to the downside. And this, in this case, would put us, at least for Bitcoin, again into this zone of around about 30,000, maybe even below that, if this comes true. So this is really one very interesting setup I'm monitoring. I'm not so much trading it short now on the S&P 500, but you know, I have like in the back of my head for my swing trade positioning on cryptocurrencies that if I go long, I might act at the moment against the market dynamics. Yeah,
I think that's a very interesting breakdown. I really like that, and I haven't really seen this before. I haven't really watched the FOMC correlation here. So yeah, I really like that, and I'm also thinking, you know, looking at Bitcoin, that 30K region seems like the obvious level if we're going to see an impulse move to the downside, and that of course correlates with S&P 500 here as well. So yeah, I like that. But you're not taking a trade on the S&P 500. You're just having that in the back of your head. If you're long crypto and the S&P shows to form this pattern, obviously one might want to reconsider those positions. Yeah, and Yeah, so let's look at if you're done.
Yeah, go ahead, please.
I want to show I want to show a setup on. So this is S&P. It's not the one I'm supposed to be watching. So I'm going to be watching Litecoin here, and we had a move to the downside. Yesterday with that when Bitcoin lost the 40K region, and I want to show quickly. It's actually going to be two setups here on, like, two setups within the same setup. So we had like one move to the downside here, and that's when I move, draw the fibs. I made a video on this yesterday, but I kind of want to update that as well, because when you come up and test the weekly open right here, and what I'd like to call the reload zone, or the short reload zone here with the 0.618 fib, confluent with the weekly open, and this pattern right here, when I see this inside this area, confluent with the weekly open, and that 50 EMA with the stochastics, this for me is a short entry, and that short entry would confirm on that 4-hour bearish engulfing, this one. But what I like to do to get the best possible entries is to get an entry like on the retest of maybe the 618 or something like that. Because now it's so close, you can just enter right here. But something like this would be like the best for me. And I would then trade it down to, because it's 2.6 down to the local lows, I would just trade it down here. But if I want to leave a moonback, I'll leave a moonback down to the minus 618. But down to the zero is what I like. So what we see here, we see price hitting that 618 and then start retracing. Now, obviously, you see Litecoin starting to come back into the entry area right here. And so this idea, I would probably, when price breaks below the 50% fib and the 4-hour 20, I would move my stops to entry. Because I now see that the move has started, right? And there's definitely some momentum here. So if this continues, it's going to hit that target. Now, because it's actually at 1R here, if you want to, like, this is obviously going to be dependent on your take profit strategy and your trade management strategy. And it's all very complicated depending on what you're actually trading, what system you're trading in, and how you back tested that, and what strategies you have to take profit. But I would argue that taking like 25% profit here before moving stops to entry might be profitable in the long run, because otherwise this would be a, not a, it's a break-even trade. And with taking some profits at 1R, you would at least have some profits, but you didn't have to make sure that the average exit is, in my case, around 2. Anyway, what I wanted to show here is what we're getting now is even better confirmation, because just the same way as I'd like to go short on in this area right here, the area between the 0.618 and the 0.786, I look for something which I call the RLC confluence, right? And that is when if I add a fib from this high to this low, will I have the same confluence? And if I do have the same confluence and I get a confirmation, it's even better. And now you have exactly that. And not only do you have the confluence with this area with the fibs, you also have the TP area in confluence as well. So what I do in this case, if I have the double confluence with the fibs, I go into the 1 hour instead of the 4 hour, and I look for confirmation on the 1 hour, and that would then be this candle right here. Now, I do think that this, not going to work out, obviously, but the risk to reward on this trade is then even better. Now, like I said, this doesn't work out probably, because I guess this is going to pump right up, but the risk to reward now becomes much better. like 4.6. You can even have the stop loss above these highs for a 2.5-hour trade. So that's how I like to look at something like this. But it's the thing is, when you go into the lower time frames here, you're gonna have much lower win rate, right? Because you already had this move, which bounced in this area. So the win rate is going to be lower, but the risk to reward is going to be much higher. While the win rate on this setup is much higher, but the risk to reward is much lower. And it kind of evens itself out. But yeah, that's so currently, not sure if I would take this trade on Litecoin right now, because it looks like it really just want to break out. So let's. I want to take a look at AUD and CD instead.
Maybe just one comment. I really like that what you said about, once you have reached an RR of 1, maybe take a little bit of profit, move your stop loss to break even. I think this is really good lesson, because at that point not only you have basically free money. You cannot lose anything anymore, and your position is just to the upside in terms of profit, and it also gives you a little bit peace of mind, in my opinion. You have taken some profit. Yeah. You're not so emotionally invested then anymore in that position, which is a good thing.
Yeah, but I also think but it can also be detrimental to your long-term success.
Yeah. If you do that too often, absolutely.
Yeah, because there in reality there is no such thing as a free trade. In my opinion, like, you can only really, I only really move my stop loss to entry based on technical reasons on the same time frame that I entered, right? So if you look at Litecoin here, if you enter, let's say you enter here, right? Now, when price is down here, there's no technical reason for me to move my stop loss, right?
Yeah, absolutely.
But if price comes up here and then starts moving down, well, now I move my stops to entry. So that's how I move my stop loss, which means I will get stopped out at entry without any profits a lot of times. But my risk to reward on the winners is much bigger, because I wait for that big winner. But
I think it's especially hard for beginners to do something like this. You see the position already moving into your direction. When it comes back, it confirms your entry, actually, because it reflects again on the weekly open there and moves into your direction. It's difficult for beginner traders to stick to the position mentally then.
Yeah, I think it's very, very hard. It's very hard for me as well. I've been doing this for many years, and it's still very, very hard for me to do that. What I've learned to do is when I'm moving my stop loss, if it's to entry or break even or in profit or whatever, I always ask myself, if price hits my stop loss, would I be able to take a new entry here? And if the question is yes, I don't move my stop loss, because you're not supposed to move your stop loss to an area where if price hits that level, you might actually be able to increase your position on that trade, Because if you're in a swing trade and inside that swing trade, you get a new entry for the exact same setup, you can then increase your position. That's not where you're supposed to have your stop loss. So I do think that I would recommend that it's hard. I don't know what to recommend really. If the best thing would be to take that partial profit and secure the position because of that peace of mind, or just do it the hard way right away. By the way, we're looking at Litecoin here, and it's actually, this might actually work out. It looked really bad when I checked it the first time, but if this breaks down, it could actually work out quite well. And it's a holiday day today, so low liquidity. I would just argue. I would just say don't trade today. Just enjoy family, do your Easter thing, eat eggs and all that.
Don't be like us.
Yeah, exactly. All right. I want to look at your next setup. You had another one.
Yeah, I have another one, and this is not so much a setup, but more a general outlook on Bitcoin. So
interesting.
And it's a bit goes a little bit into the opposite direction of what I just said, because what I like to do on Bitcoin, and let me just remove the volume here and this indicator down here, so we get a closer look. Oh, wait, like this. Yes, I want to remove it. Here we go. And what I like to do with Bitcoin is I also like to look on-chain metrics there. So it's kind of a 3D view, which you don't have on any other assets out there. And there are a lot of tools nowadays available to do so. And one I specifically like from Glassnode. Now, Glassnode is a company that does those on-chain metrics. You can kind of buy also, the suite where you can analyze for yourself. But if you want the whole package, it's like $799 per month. So not on the cheap side, but what they have is like a weekly market report where they highlight like interesting things from this on-chain data. And I especially always like to look at something that they call URPD, where you can see what were the zones last time where so-called long-term hodlers of Bitcoin, so people that hold to the Bitcoin in general for over 1 year, transacted those. So you can kind of determine from this where were zones, price zones, where people were heavily buying and selling. And those price zones, one interesting price zone there at the moment is really here between $33,000 and $40,500, which is a huge zone where last time we saw people that hold on for over a year to their coins buying. And so my working theory now there is at the moment that this zone of support, it really would take an enormous price pressure and lots of selling to really break through the zone. And you can see this actually from the beginning of January. Every time we dive into this zone, we see the market sooner or later turn around again. So my long-term play here at the moment is really to kind of start snacking up some Bitcoin positioning again here at 39,500 all the way down to 33,000. Now, I'm of course aware that this goes a little bit against what I just analyzed here in terms of the FOMC. However, since I'm talking here really about long-term positioning, so these are positions I tend to hold maybe for a year, 2 or 3 years. And like I said, just from those on-chain metrics, I think we see a very, very good zone of support all the way down to 33,000. I would be really, really surprised to see Bitcoin really bashing through this. It's not impossible, especially if this plays out. So if we really see the S&P 500 going down all the way to 4,000 points or below, we will for sure also see Bitcoin at least attacking here this level of 33,000. But in the long run, I think this is just from the on-chain metrics, a great zone to buy again, because it's going to take a lot of effort from, let's say, the bears out there to push us through this zone. And you can see this also the last days. Whenever we entered this zone, we again see a little bit of pressure to the upside again. It's not more.
Yeah, I could definitely see I mean, I could definitely see a huge move down into the area, like imagine a liquidation cascade or something like that from the below 40K region or something like that, and then a big move. Like, I mean, even if we see like a huge daily candle to the downside, I mean, even a 15% drop would still only take us down to that region.
Exactly.
So, it's just such an obvious support. So I do think that even if the S&P 500 drops completely, we could still see like 32, the low of that on-chain support area you draw there. I think that would still be a massive move to the downside that might correlate with the S&P 500 move.
Yeah, and even, I mean, if we drop there, you can also see here from the S&P 500. Once that drop is there, we always see the market swinging to the upside again too. So this is really like a very, very long-term kind of trade. So for really those very long-term positioning, I don't think it makes sense, to kind of try to fish the top or bottom. It's more like I want to slowly scale myself into the market there. And yeah, this is at the moment my strategy to scale myself in. So if everything works out, we see this drop in the S&P 500. We probably also will see Bitcoin trending lower again. But in this region, I have my limit orders already to kind of snack Bitcoin up all the way from 39,500, which already was executed a couple of days ago, down to 33,000.
Yeah, I think I like that. I like that. Let's. I'm going to look at AUD NCD, Australian dollar versus New Zealand dollar, and that's going to be our last setup. So we're going to try to keep it a little bit shorter now and not do this for 11 hours. But keep it a little bit shorter. This is this is AUD NCD, and I've actually been trading this for about 2 months now. No, 1 month. So from the beginning of Mars here, I've been trading this to the long side with quite a few interesting long setups. You can clearly see how this trend right here is what's been my focus, right? So going, taking swing longs. I had one entry here, one entry here. I think one here and one here, which was very unfortunate because I got stopped out on that wick. I also took a position here and stopped out on that wick. But anyway, the profits from this one kind of evens that out. And fun fact, this was the interest rate decision for New Zealand. So that was just my bad. I should have closed the position. I completely forgot about that. So that's also something to note when you're trading the Forex market. Keep your eyes on the high impact news event, and even in today's market condition, the medium impact news event as well will have great impact, because on some sites the Fed speeches is actually a medium impact news event historically, but in this market condition they are actually high impact news event, I would say. So definitely keep your eyes on that. So what I'm doing here on this is basically what caught my interest here is the hit of the weekly open with the trend. It's quite a clear horizontal area right here with the weekly open going straight through it and the wick hitting this. So I quite like this area, and I think this is not going to be a good trade today because of the bank holiday today and I think it's a long weekend. I think we have it on Monday as well, right? So I would just argue that don't trade this, just take it as an educational example. And basically what I'm doing here is when I see an interesting area, I'm trying to figure out is there any confluence here? So we have the weekly open, that's one confluence. We have the 4 hour 20 EMA is kind of holding support nicely here, so that's one confluence. And then the horizontal level also adds to that layer of confluence, and then we have the stochastics RSI down here giving us a signal that it's oversold. So what I'm doing here is basically I'm trying. I have a list of confluence that I try to check, right? And when they're all checked, it's a trade, right? And that's what I like to call the perfect trade, right? Mm-hmm. Because if I think I have like 5 confluences, and when they're all checked, it's a perfect trade. It has to be 3 confluences to even be considered a trade. And in this case, it's this gives me about 4 or 5 confluences, because you then have the best case would be if the 618 would be like in perfect confluence with the weekly open, but it's really the area between the 50 and the 618 that's
so where would you enter like this type of trade now?
Yeah, that's the problem, right? That's the problem, because this is not a perfect trade.
Okay.
I would argue that it's confirmed, right? Support is confirmed, right? But we need some added confirmation here. So what I do in that case is I go down to the 1 hour, and on the 1 hour, the area of interest is going to be the break above this range, right? So the break above this range would confirm it, right? So what I would do in that case is I would put an alert here, right? And then when this alert goes off, I know there's a breakout, right? There's a breakout above that range, and this range confirmed the support. I would then place orders on the breakout, and then stop loss below the weekly open. So that would be the trade. So the trade would look something like this, probably right below that wick. And instead of, because price is so close to the 0%, I wouldn't TP here. I would TP at the -236 instead, and then up here. So it would probably be 25% TP and then 75%. So the risk to reward on this would be 2.5. So that's probably how I would play this, and it kind of lines up with the idea on the 4 hour as well. Because, like I said, it's pretty much already confirmed. You have that wick; it's a big wick. There's a lot of buying pressure right here, and if you can see that push to the upside, it would confirm that price wants to at least try to go higher. Now, let me show you another example of exactly this type of setup on the same pair. Like I said, what I looked at. Oh man, I have a thing I use to draw my screen, but it's not on right now, so I have to use TradingView. Anyway, this right here, this candle right here, that's the confirmation I look for in a trade. So what I do here is I add the fib from that low to this high, and now you can see that bullish engulfing candle happens right on the 0.618 and right above the daily 20 EMA. And I do put more emphasis on the daily EMA. So if there is a pullback down to the daily EMAs and everything else kind of align, I will take that trade. And now, as you can see right here, this is a trade where I unfortunately got stopped out because I did move my stop to entry. I did move my stop up and I got stopped out on that. So if I would just keep this open, this trade, this would have been a very, very profitable trade. Mm-hmm. And you can see here that this is basically the same move. This is basically the same move as this one. But what I'm doing here, is I'm entering later, right? So I'm entering much later, but basically doing the same type of move. But that would be the setup. That would be like almost a perfect example of the setup, because you also have the bull cross right here on that bullish engulfing. And even up to TP1, this is a 3.6R trade. And when you get a trade that's above 3R to the local high, you just take that trade, in my opinion.
Yeah, I mean, you need to be correct like only 25% of the time, and you're still earning
exactly
money with this type of risk-reward ratio. Yeah.
So chances are, if you wait for 10R trade, chances are you're not gonna make a lot of money.
Yeah.
All right, man. I think that's it for today. We're at 28 minutes. I'm glad that we managed to keep it under half an hour. Yeah, man. So I'm really glad to have you on here again, and I'm looking forward to doing this the next time as well. Now let's see how this plays out, and
yeah,
I'm definitely very interested to see how that S&P 500 idea plan plays out with the Bitcoin on-chain metrics you watched as well. So let's maybe circle back to that next time to see how.
I'm going to watch Litecoin and Aussie Kiwi also. I'm going to open that's great lessons and how you pick your trades wisely. Really.
Yeah. All right. Thank you, man. It's great to have you. Take care,
everybody.
And see you guys next time.
Bye-bye.
Bye.